What's up, y'all? How ya doing? This is Sunko, and I'm back. Today is 2022 and January 12th, and nothing's new today. Just after having my uh, oh, one person came. Uh, I was about to say the thing that I had done tonight, and what I really want to say is that uh, stock news is getting more interesting. Like just like yesterday, I'll be reading some of the articles posted today, and or the articles posted a few hours ago, and I'm gonna look through and see if any interesting article mm, are already posted. Okay. The websites that I'm going to use are Market Beats, Yahoo Finance, mm, Market Beats, and ZaxInvestment.com. Okay. Let's see what interesting articles we have today. A lot of stock went up today. It's all greenish, pretty much. Marco de Libre went up by 10%. And Peloton Interactive went up by 6%. It goes up and down, up and down, up and down. Um, it's been going down continuously, but now it's going up again. Mm. And there's an article about why it went up. Uh, let's look at this first and go through articles. Okay. Hmm. Oh, but here it says why Marco de Libre fell by 19.5% in 2021. So people who invested in the stock at the peak of Marco de Libre would have been devastated when he fell by 19.5% in 2021. But now is the great chance. Now is a great time uh, where you can actually trade and earn money because mm, it's cheap. I mean, it's cheaper than 2021, obviously. Uh, let's look at this article and mm, any. Let's come up with some ideas, okay? Marco di Libre. Mm, stock click related articles. After days of declines, a large number of e-commerce and technology stocks staged a wide-ranging relief rally on Tuesday. Investors focused on a broader range of economic issues, allowing high growth to comeback. E-commerce platforms have taken it on the chin recently, as investors bet that massive gains resulting from the pandemic would eventually fade. Massive gains resulting from the pandemic would eventually fade. Hmm. What happened? Okay. Shares of Amazon gained as much as 3%. Sea Limited climbed as much as 8.8%. and Marco de Libre surged as much as 10%. The trio were trading higher, up 2.3%, 6.4%, and 10.5% respectively. Um, so what? Yes, so what? Hmm. There wasn't any company specific news driving these gains, but rather a more upbeat attitude on Wall Street that seemed to be pushing many beaten down stocks higher. E commerce platforms have taken it on the chin recently as investors bet the massive gains resulting from the pandemic would eventually fade. Adding insult to injury, all three major market indexes have slumped so far this year, dragging technology and online shopping stocks further into the red. Fears regarding the surge in inflation and the ongoing spread of the Omicron variant um, of COVID-19 have helped drive the major market indexes down since last December. However, positive sentiment seemed to prevail Tuesday as investors considered a number of factors that seemed to boost their morale. Given the recent spike in inflation, the Federal Reserve has signaled its willingness to hike interest rate as many as three times in 2022 to rein in overheating price growth. Some markets watchers are now predicting that the Fed could hike rates as many as four times to keep inflation in check. Mm. So now what? Mm. It's important to so what happened here is that after recent declines, some of the stocks went up uh higher, up by 3%, 10%, like respectively. So what? Uh, so what? The main idea that the author of this article came up with is that the reason it went up this much is because uh investors are still positive because uh the Omicron variant of COVID-19 will someday uh, be gone for sure in the future. So, investors are likely to invest in stock for a positive future because like it's not like uh, this Omicron thingy will ruin everything. Someday it will we'll get over it and right. So anyway, not what. It's important to remember that while broader economic forces can impact the market over the short term, revenue and earnings growth will eventually determine the success or failure of a business, and stock prices will react accordingly. Yes. Hmm. After being cooped up for months on end, consumers have recently taken advantage of summer vacations and the loosening of pandemic related restrictions to get out and enjoy life. This has had an adverse, albeit temporary, impact on online retail, but not all e commerce companies were affected equally. Amazon's revenue growth has slowed so far this year, increasing 15% year over year in the third quarter. It's worth noting the company faced a tough comps in light of its blockbuster results last year when full year revenue jumped 38%, its highest growth rate in years. So the deceleration wasn't entirely unexpected. Hmm. Yeah, well, stuff like that. So the main reason it went up is because of the positive vibe around investors. Mm. Nothing new, because a recent pandemic and the rates, the Federal Reserve, nothing new. And let's look at the articles related to Peloton Interactive. Hmm, I'm pretty sure that the reason it went up this much is because of positive vibe as well. Boeing Salesforce lead Dow Jones rally, Nasdaq 100 jumps 1% as EV market maker Lucid, Illumina, and Peloton soar. Nothing new. Hmm. Wow, 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 wow. Okay. Hmm. What else do we have? Fubo TV went up by 9%. Hmm. Hmm. Fubo TV boosts revenue projections, but the stock is falling. Hmm. Hmm. Let's look at profile of this company. Fubo TV is headquartered at New York, United States, and its employees are about 220. Uh, Broadcasting industry, communication services. But looks like it's only available uh, in the States, not the place where I live, which is South Korea. Mm. Uh, uh, uh. And what else do we have? Wow, 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 wow. Stronghold digital mining went up by 12%. Uh, okay, that's about it. Stock futures drift higher as investors await inflation data. How the Fed's balance sheet can address inflation. Kathy Wood reject Fed's inflation job warning. Three big investing themes for next decade. The mega sellers of big tech CEOs, Kathy Wood expecting a bloodbath in this segment of the market. Autos are one example of many disturbances out there in the world. Apple, Microsoft, and 13 more tech stocks help investors forget the Fed. Markets are changing fast. What to do with your favorite stocks? Dow Jones gains its Powell. Cheap stocks to buy. Should you watch these five growth stocks? Four reasons why value stocks are poised to outperform growth in 2022. And 14 stocks to consider. Stock market normality returns, and it hurts. Here are four of Gene Cramer's top stock picks for 2020. If you're a risk investor but still want solid growth, these might for you. The bottom is in for these two stocks. Morgan Stanley says buy. Bond King Jeffrey, Gauntlet. Morgan Stanley has an overweight rating on these three stocks yielding. Um, okay, now let's look through it. Okay. Hmm. How the Fed's balance sheet can address inflation. The Federal Reserve is turning its attention to taming high inflation, but it is going to take more than just higher borrowing costs to curb price increases. The central bank will also have to figure out a strategy. Uh, what to do with its nearly $9 trillion in asset holdings. One that could prove critical to the effectiveness of the Fed's attack on rising prices. A broad Fed tightening could disrupt the bond market, risking recession. Interest rate hikes or yesterday's news, Morgan Stanley Managing Director Jim Crone told Yahoo Finance on Tuesday. Crone said the main thrust of Fed policy will come from how it undoes the stimulus coming from its balance sheet. Uh, with prices rising to a tune of almost 7% year over year, the Fed is now trying to wind their program down to a full stop, a process it hopes to complete by March. Okay, next article, three big investing themes for next decade. The BlackRock strategist looking to escape the daily volatility in its market, then find a few great investing themes and invest around those for next decade. Argues Kate Moore, BlackRock's head of thematic strategy for the global allocation. Three of my favorite themes are disrupting the consumer, the digital transformation, and really thinking about climate and ESG opportunities around the globe. The closely followed strategies revealed in Yahoo Finance Life. More points to software companies as one way to bet on digital transformations well underway inside global business. Meanwhile, the electric vehicle supply chain looks to be a good bet on automakers moving to more climate friendly autos. There are great opportunities globally in that space. Thinking longer term, as more implies, is a refreshing reminder early on in what is shaping up to be a volatile year for the markets. There's just some great stuff you should pick up right now, and other stuff that you have to be a little bit more cautious on. In particular, I would say it might be time to start hunting around in the tech and software space. Some of those areas that have been disproportionately punished in the first six trading days of the year, more added. So he basically means it's better for you to uh, trade software companies because he says have been disproportionately punished in the first six trading days of the year. So the first 6 days of this year, some of software companies were beaten hard. So its price is low. Since its price is low, once you buy it, it's gonna go up for sure. So. hmm. Apple CEO Tim Cook is flush with cash. The head of the world's first company to reach a $3 trillion market cap took home a staggering $98.7 million in stock and cash in 2021. That's a 571% increase in his compensation compared to 2020. Cook, of course, has seen Apple through a slew of first, including hitting a market cap of $1 trillion in 2018. Mhm. Oh, and he also oversaw the release of everything from new versions of the Apple Watch to the company's expansion into streaming services. Kathy Wood expecting a bloodbath in this segment of the market. Bloodbath in this market. Autos are one example of many disturbances out there in the world order. Mm-mm. Kathy Wood, the staff manager and chief executive of Ark Investing Tuesday monthly market update says that the used car market is where she is expecting possible losses after surge in values. She's expecting possible losses. Uh, where she's expecting possible losses after surge in values. Used car market is where she expects losses. Okay. She wouldn't be surprised to see a bloodbath in the used car market with valuations tumbling in the coming year into 2023 as prices that have surged because of supply chain bottlenecks and a pot in demand recede. We will submit that they might be looking at losses, Wu said, referring to internal combustion engine car companies that manage to outperform electric vehicle manufacturers such as Tesla, mm, which is considered the vanguard of the EV wave last year. The comments that Wood made on Tuesday are similar to those that she expressed via a video released by the company earlier this week, where she cited rising inventories of used cars, among other things, as evidence that values will tumble in the coming year and her sales of new vehicles as well for traditional car markets. Yeah, like General Motors. The monthly update from Wood and her team and ARK invest come amid a brutal stretch that has compelled the operators of the ARK Invest ETFs. Hmm. In a later tweet on Tuesday, Wood said China is a leading indicator of a change in the consumer preference for EVs, responding to a tweet from ARK Invest analyst Sam Kurosh, who also noted that gas-powered auto sales were down roughly 4%, while those for EVs were up around 145%. Apple, Microsoft, and 13 more tech stocks help investors forget the Fed. Markets are changing fast. What to do with your favorite stocks? Hmm. Should you watch these five growth stocks? Okay, bull market, bear market, or trend last market, regardless of what stage of the market cycle we are in. Some folks never tire of searching for cheap stocks to buy, and who doesn't love a bargain, right? Yes, I love bargain. After all, the lure of finding a stock that triples from $1 to $3 a share, or quantuples from $5 to $25, may prove irresistible. However, are there any unique problems or subtle challenges with this strategy of hunting cheap stocks to buy? Yes, let's consider a few. Hundreds of stocks trade at a low price on both the Nasdaq and the NYSE. So, how can you pick the winners consistently? Here's another problem. IBD research consistently finds that dozens, if not hundreds, of great stocks each year do not start out as penny shares. Most institutional money managers don't touch cheap stocks. Imagine a large cap mutual fund trying to buy a meaningful stake in stock that has been trading at 30 cents a share. If it has thin trading volume, the fund manager will have an awfully tough time accumulating shares without making a big impact on the stock price. Another cold, hard truth that proponents of penny stocks don't tell you: many low priced shares stay low for a very long time. So if your hard earned money is tied up in a 50-cent stock that fails to generate meaningful capital appreciation, you might not only be nursing a losing stock, you also face the lost opportunity of investing in a true stock market leader in leaderboard or a member of the IBD 50. And now let's first take ah, darling, here my girlfriend came. I miss you too. Okay. Yeah, indeed. Uh, my girlfriend has always been telling me that I look like Potato Head. I know she cannot hear me at this point. She's now getting a haircut, and she says she's about to finish, and it's gonna take another 30 minutes. So by the time I finish my YouTube live, I'll be talking to her on the phone. Okay, I'll get it. 11 o'clock. Mm. Okay, I was talking about Zoom Video. It's one of the stocks that I invested in, and so far, no, 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 it's not the stock that I invested in. It's one of the stocks that I keep looking at, because I still think that it's kind of stock that has high value, but because people think that Omicron will uh someday will someday go away. So people think that Zoom will be used less because of that reason. People sold some of Zoom video stocks, so it went down drastically. Um, but I think it's the great chance, since its value is high, but then its price is low, which is a great chance. Hmm. So let's consider Zoom video and telemedicine pioneer Teladoc in 2020. Uh, Teladoc is also the company that I'm looking at. After the coronavirus bear market ended, these two and many others traded at an expensive price when they broke out to a new 52-week highs and began magnificent rallies. But the quality of their business, the supercharged growth in fundamentals, and significant buying by top-rated mutual funds that formed at their premium share prices signaled a high level of quality. Zoom Video, after clearing a deep cut base at 107, went on to rise nearly sixfold to its 2020 peak at 588. So, how about the year 2021? Zoom stock is struggling as it forms a new base and tries to bottom out. Hmm. Teladoc roared past an 86.40 proper by point mid January 2020. 7 months later, the stock hit 253, up 193%. Now it's down a bit. Mm, I'm a little bit tired. I'm not sure if you're still watching it or not. But I see that there's no one person watching this. Four reasons why value stocks are poised to outperform growth in 2020 to 14 stocks consider. Hmm. Here are four of Gene Cramer's top stock picks for 2022. If you're a risk averse investor but still want solid growth, these might be for you. Honeywell. At this point in the business cycle, the playbook says you have to go with more tangible companies that make real things and generate real profits. Kramer said last week on CNBC, one company he feels fits that bill as Fortune 100 mainstay Honeywell. As a global industrial conglomerate, Honeywell provides an attractively diversified mix of services and products that range from aerospace and building technologies to safety and productivity solutions. Hmm. Despite a snarl global supply chain and decreased demand from its deep-pocketed airline customers, uh, okay, Honeywell, hmm, hmm, Honeywell. Let's take a look at Honeywell and see what this company do. Honeywell. Hmm. Honeywell CEO on where companies headed in 2022 as coffee remains in picture. Revenue is going down. Earnings remain still. Mm, CEO, Honeywell CEO Darius Adamczyk recently said that with the Child Business Journal to review recent developments and look forward to a new initiatives in the coming year. Hmm. 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 Okay. Hmm. Ah, hi Moon. Can you hear me? I know you're still getting haircut. Tee, 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 tee. Boshu Health is a Canadian pharmaceutical company that develops, manufactures, and markets pharma products and branded generic drugs that target a wide variety of health disorders. Hmm. Chevron is looking pretty good. America's second largest oil company continues to benefit from the ongoing inflation driven rally in energy prices. Eli Lilly. Hmm. Farmer giant Eli Lilly expects sale of COVID antibody-based treatments to help it make a projected $28 billion in sales for 2021. Any interesting articles about mm, technique or something fancy? Mm. Let's now go over to Market Beat and see what it says. Okay. Uh, this is turning point for organic gram. Asian stocks follow Wall Street up as Powell says rate rise. All cylinders. Universal healthcare bill advances in California Assembly. Medicare limits coverage $28,000 a year. Alzheimer's drug. Do you have these consumer staples in your portfolio? Consumer staples. Sienna stock is running on all cylinders. This is turning point for Organigram. Three large cap tech stocks to buy and witness. Procter, okay, let's read this article. Do you have these consumer staples in your portfolio? Check out these must-haves in 2022. The S&P 500 Consumer Staples Index has continued to soar since the peak in economic growth, and the potential for higher market volatility puts downward pressure on cyclical sectors. Consumer staples earnings profile and defensive approach could give you a portfolio lift. Why else should you invest in consumer staples besides the whole ongoing discussion about the fact that consumer staples are important for portfolio diversification, offer steady growth, solid dividends, and low volatility, particularly in the face of high inflation, which we're experiencing right now. Some sectors generally perform better than others if inflation rises. Right? Enter consumer staples. What are consumer staples? So, what are consumer staples anyway? Consumer staples consist of companies that provide goods and services that people use on a daily basis, like food, clothing, and other daily uses personal products. Consumer staples. Defensive dividend paying stocks. So if you are seeking security, you may be happy with the dividend yields offered by consumer staples. Procter and Gamble. Bongo, Archer Denny's. People still need bread and milk. What's the first thing that goes by the wayside in a high inflation environment? What's the first thing that goes by the wayside? Without a doubt, luxury items. But in high inflation environments, people still need to buy bread and milk. Yes. It's easy to see why consumer staples stay in demand throughout a high inflation environment. It will always be the case that companies compensate by passing on these rising costs to consumers. Mm. Oh, there you go. MongoDB, the company that I know. It's MongoDB. MongoDB is one of the DBs that I'm familiar with. I'm not sure if I'm gonna ever use it, but since because uh as I'm working as a software engineer, I looked some of the DB programs that I can use, and it was in my list. It was on my list. So let's see what this article says. Okay. Hmm. After leading the market to record highs in 2021, the technology sector is the biggest underperformer to start the new year, as investors witnessed last year when Treasury yields surge, such as they have in recent weeks. High growth companies like tech are among the hardest hit. At the same time, however, when yields stabilize and the market recesses the biggest growth opportunities, the tech sector often rises to the top. This could mean the early 2022 sell off will amount to another buying opportunity for some perennial market leaders. Some of the most compelling tech names on sale are those that are not just down sharply this year, but have been in a downtrend since December. Given their likelihood to turn things around, here are three of the best down but not out tech names. Here are three of the best down, but not out tech names. HubSpot sell-off a buy opportunity. HubSpot, incredible run, finally took a turn for the worst late last year. The customer relationship management software Upstart has failed to regain its mojo since its third quarter earnings report got mixed reviews. After brief post-earnings recovery, the stock fell 18% in December, and is down another 20% year to date. A sell-off of that magnitude would suggest there has been some sort of warning about this year's performance, but that hasn't been the case. Instead, the decline has been largely driven by profit taking and the latest assault on high multiple tech companies. While still not cheap by any valuation measure, HubSpot is starting to stabilize and is likely a good buy opportunity here. As business went digital at a neck-breaking pace during the pandemic, HubSpot became a huge beneficiary on account of its value-added CRM offerings and worldwide presence, catering to oft-forgotten small to medium-sized business has allowed it to capitalize on the opportunity. The stock got ahead of itself, as can happen with fast-growing tech companies, but underlying demand remains strong. HubSpots. Okay. MongoDB began selling off after Christmas in conjunction with the Nasdaq's downturn and has slipped into bear market territory. The high-flying infrastructure database software player staged a nice rally on Monday that could mark the bottom of the recent swoon. As large corporations and organizations move their IT workloads to cloud environments, MongoDB's cloud-based Atlas software will be a force to be reckoned with. It has been the company's major growth engine and become the biggest component of the business, accounting for almost 60% of revenue last quarter. This is an attractive development from an investment standpoint because the subscription-based product presents visible recurring revenue streams. Since MongoDB's mission is on a mission to grab market share at the expense of profits, it is still operating at a loss. But pending next month's fourth quarter results, the loss is expected to have improved significantly for the second straight year. To suggest the management strategy of going after the massive database software market is working and will eventually translate to profits. MongoDB. The impact of the global semiconductors and shortage has been widespread. Advanced micro devices has been one of the most resilient. Management's stellar job of working through the challenges propelled the stock to an all-time high. In November 2021, before a benign low on volume sell-off took hold, the world's second largest microprocessor company wowed the market with its third quarter results, a performance that has seen been overshadowed by broader market dynamics. It crushed consensus earnings estimates and raised its full-year revenue growth outlook for the third time to 65%. With that kind of growth and profit margins trending higher, advanced micro devices deserves a premium valuation regardless of the impact of higher interest rates. Advanced micro devices. It's already on my watch list. It's already put on. Hmm. As businesses continue to embrace remote and hybrid work solutions in a world where plenty of pandemic uncertainty remains, AMD will continue to benefit from that growth, especially as supply chain pressures ease. Tossing the growing demand for data center solutions and gaming processors, and the company has multiple long-term growth drivers at its disposal. Okay. Hmm. Okay, company of the day. Hmm. Good one. Paladin Interactive. Didn't we look at this company last night? It's a company uh for people who do work out at home, right? They got like subscription service and they sell products that you can use at home, stuff like that. Hmm. Not Paladin technology. Now let's go over to something else. Upstart Holdings. Let's look at this. Mm, Upstart reports fourth quarter and fiscal year for 2021 earnings on February. Mm. Its revenue is growing rapidly. Hmm. Earnings is fairly low, but its revenue is incredible. It's got 554 employees, headquartered at California, Delaware Street, Upstart.com. Better loans, brighter future. Mm. Fair personal loans and car refinancing. Many people are growing increasingly savvy and want an alternative to high interest credit cards. Offstart's model has expanded credit access and encouraged other lenders to explore. Ways to lend to more people with no or limited credit history. Check your rates. Fill out a form to check your rate in minutes. Verify your information. Get your money. 99% of personal loan funds are sent just one business day after signing. 99% of personal loan funds are sent just one business day after signing. What is a personal loan? What is a car refinance loan? How long will it take to get my money? Will it affect my credit score? Do I pay a fee if I pay off my loan early? For dealers, for lenders, Upstart, wedding loans. What does company do? Upstart. Upstart is a leading AI lending platform partnering with banks and credit unions to expand access to affordable credit. As we transition to being a public company, we're now poised to leverage our domain expertise and revolutionize every aspect of lending and credit risk evaluation. We've recently expanded our offerings to include automobile refinancing, and we plan to take on more verticals as the business grows. By leveraging Upstart's AI platform, Upstart-powered banks and credit unions can have higher approval rates and lower loss rates, while delivering the exceptional digital-first lending experience their customers demand. Upstart's patient pending platform is the first to receive a no-action letter from the Consumer Financial Protection Bureau related to fair lending. Upstart not only supports a large remote workforce, but also has offices in San Mateo. If you're energized by the impact you can make at Upstart, we'd love to hear from you. Personal loans, fintech, marketplace lending, machine learning. So this company is an AI company that deals with loan, personal loan, wedding loan. The company which gets you money in not minute, but like a day after or so. Okay. Now that's enough today. And I'll be seeing you guys tomorrow. Okay. Bye bye.